All right, so our dog of the week, like Aaron said, is Roblox, symbol RBLX on the New York Stock Exchange. Roblox provides an online entertainment platform for audiences under the age of 18 and maybe Brennan. The game allows for communities of developers to produce their own immersive multiplayer experiences using Roblox's studio, the company's intuitive desktop design tool. So effectively, it's just a game within a game, and that's what those developers create. But the share price has fallen about 20% overnight following its Q2 earnings to the price of about $30, well below its all-time high of $135 set in late 2021, which was shortly after its IPO. So why did the company fall 20% overnight? The Q2 financials just did not live up to expectations the market had put on the company. As the company is pre-profit, the valuation is really based off these expectations of becoming profitable in the future. So when growth is below expectations, it can cause these sharp drop in prices overnight like we've seen here. So really looking at the actual financials, revenue was up 15% year over year to $681 million. 17% is on constant currency as the US dollar was strong still. Bookings were up 22% to $781 million. Bookings for Roblox are when people or Aaron purchases the game currency, Robux, but have yet to spend the in-game currency. Net loss further fell into the negative to $283 million from a net loss of $179 million in the prior year. Additionally, outside the normal financials, average daily users, so effectively the user base, was up 25% to 65.5 million. However, the average monthly bookings per user was down 3% to 1192, while the average monthly bookings per unique player, so the people who are actually paying the money, was increased by 3%. So users who make purchases spent slightly more, but then as the whole, users spent slightly less per person, meaning overall revenue growth really needs to come from user growth and not per user spend, or at least that's the trend we're seeing right now. So taking the financials as a whole, though Roblox is seeing user growth resulting in revenue growth, the profitability shifted away from the all-important break-even point, which is really what you need to look at these companies. And just for context about how much growth is expected for the company, after this fall, it is still trading at about 7.6 times sales. So it's not exactly a fire sale after a 20% drop. It was just absurdly overvalued in 2021. If you're looking at the stock price saying, oh, it's a quarter or whatever of it was then, it was about a 60 times sales then, which is just absolutely astronomical and shouldn't even be considered at that point. But really, for now, Roblox has earned our covenant or not so covenant dog of the week.
Good. Yeah. Well, I can honestly say, even though Roblox does get played in my house, we have not spent ever a dime or a penny on it. I have heard the term Robux quite a bit.
Yeah.
I think you can also just earn them. I guess you can buy them as well. But yeah, so it's, user growth, but then users also have to pay.
I was actually hanging out with a girl that ended up buying Roblox stock back in 2021, and I asked her, I was like, why did you end up buying it? Reddit told me to. So that was her investment conclusion. And good thing Ryan's not here, because he'd say that didn't happen. You don't hang out with girls. That's what he'd say. Anyways.